Thank you very much indeed, Alice. It says a lot about the transformation of venture capital in the UK, that even 5 years ago, the question was being asked at events like this, why are there no UK unicorns? 5 years on, increasingly, the relevant question is, why are there so many UK unicorns? So where's the next set of unicorns going to be discovered? Will it be in Zone 1, or perhaps more likely, elsewhere in the UK? So to oversee this debate and this question, it's my great pleasure to introduce the fabulous Gurpreet Manku, Deputy Director General and Director of Policy at the BVCA.
Thank you, Tim, and good afternoon, everybody. Like Tim said, we're going to be talking about venture investment across the UK. I'm the BVCA's Deputy Director General. Many of you will know that we look after a lot of the policy work here that affects the investment that you all make across the country. I'm pleased to welcome Max, who's a co-founder and partner of IQ Capital. IQ Capital is a seed and early stage VC investor focusing on deep tech. They back investments in machine learning, AI, data science, and database propositions and IP based on disruptive algorithms. Now, Tom is the CEO and Managing Director of Oxford Capital. Oxford Capital is also an early stage tech investor, and its strategy covers the future of mobility, fintech and insurtech, the future of retail, digital marketplaces and health, and AI and machine learning. So AI is popular. Mark is the CEO of Mercia Technologies. Now, Mercia Technologies has a hybrid investment model that brings together both third-party managed funds and scale-up capital using its own balance sheet. It invests across the country too, with a focus on digital entertainment, software and the internet, electronics and hardware, advanced materials, engineering, specialized manufacturing, as well as life sciences and biosciences. Now, last but not least, Ken is the Director of Venture Solutions at the British Business Bank. Ken is responsible for the design and delivery of UK government-backed equity support programs, such as the Angel Co-Fund, the VC Catalyst, and the Enterprise Capital Funds program. Now, to set the scene, given that I've talked through all the different sectors we're investing in, I thought we could look at some of the stats. Now, recent research by the British Business Bank showed that equity investments, so UK equity finance, into small businesses bounced back in 2017 after a decline in 2016. It grew by 89% to a record £5.9 billion. And within that, tech and IP totaled, again, a record high of £2.1 billion. And deal sizes increased across the whole of the market, with average equity deal size increasing to 4.9 million in 2017 from just 2.2 million in 2013. Now, looking at more current data, KPMG's Venture Pulse report showed that VC investment across the UK doubled in the second quarter of this year to 1.6 billion, with later stage financing responsible for much of this activity. So why am I talking to you about the stats? Well, firstly, it's easing you into this. There are going to be a few stats throughout this session. We like our numbers here. But also, it's because we've seen this emergence of more money going into later stage financings, which probably leads to the unicorns Tim was mentioning. But what it demonstrates is that the UK venture environment remains robust. The other consistent bit of information coming through from this research is that whilst London still dominates in terms of the number of deals, we are actually seeing clusters of strong activity in places such as Edinburgh and Glasgow, in Bristol and in Manchester, as well as Oxford and Cambridge. There are also references to a strong fundraising environment and the impact of government initiatives such as the Northern Powerhouse and the Midlands Engine. So what I wanted to ask the panellists was, for their feedback and their experiences, and provide you with some contextual information around that growth that we're seeing. Starting with you, Max, we'd be keen to hear your perspective on the Cambridge ecosystem and why it's become so successful.
Thank you. Well, we have been investing in Cambridge for 20 years, and the change of the ecosystem in that time has been dramatic. I mean, of course, Cambridge has been around for 850 years, and it likes to say that if it were a country, it would be number 3 in the world by the number of Nobel Prize winners. The thing is that, of course, innovation is not measured by Nobel Prize winners alone, at least. What we have seen is that since the 70s, when they were one of the first, if not the first in Europe, to go and focus on commercialization, the Cambridge phenomenon really took off. What I find amazing is that in the last 5 years, the university spun off almost 100 companies, which raised $2.2 billion combined. And that's just, in fact, it's not even full 5 years. And that is 15% more than Stanford, which is number 2 in the world in terms of its progress. It's 2 times as much as Oxford. It's 2 times as much as UCL and Imperial combined. So that has been a significant engine of the growth in the ecosystem, but it's not the only thing, because it has taken the life of its own. Cambridge has now produced $12 billion companies, 2 of which have been Deca unicorns, Arm and Autonomy. Some of them are, well-known brand names, like Booking.com actually started 50% of its life in Cambridge, or Raspberry Pi, other sorts of names that people will recognize. But there's many more smaller companies, Improbable, for example. It counts as a London company, but actually it was set up by 4 guys from Cambridge. DeepMind, again, one of the founders is a Cambridge guy. So Cambridge goes beyond the geographical borders in a sense, but even if you were to say it's just the 30 square miles, on the last count, and there's a lot of detailed statistics on that, it's almost 6,000 technology businesses. And they are not startups anymore. They employ 63,000 people. They generate $14 billion of turnover. And last year, that grew by 14%. So, the pace of growth, also the sophistication, where finally you see people who are not only good technologists, but people who are able to build product, who understand how to then market it, how to find the product market fit, how to scale those companies globally, entrepreneurs who are doing it second, third time. In fact, on a lot of these KPIs, Cambridge is comparable to some countries like Israel, very similar sort of KPIs. And I find that amazing.
That's fantastic. Now, Tom, what's been your experience of the Oxford cluster and investing in the Southwest? And since you do have a big London office, how does it all compare?
Yeah, thank you. So we took the decision about 3 years ago to move our venture capital team full-time from Oxford to London, and that was not a statement that we don't believe that Oxford is an important market, but it was a statement that we needed to be in London in the ecosystem and in the flow in order to better address the UK opportunity. So we do invest actively in Oxford, we invest in Bristol, we invest in Manchester, Edinburgh, Dundee, all over the UK, and we find pockets of great companies in each of those places. And I guess we'll talk later in the panel about what it takes to grow them from that sort of seed phase, because a lot of this does happen in the universities, as Max was pointing out with respect to Cambridge. The university has been the powerhouse, and that in terms of the development of talent. But you need a commercial focus that goes with that, and Cambridge really is the paradigm here that everybody else, I think, should be looking to. But with respect to Oxford, there are billion-dollar companies there as well. There are older companies like Sophos on the tech side that came from Oxford. On the healthcare, gene sciences, drug discovery, companies like Nanopore and Immunocore, very, very valuable companies, which are being founded in the Oxford area. But it does cluster. I think cluster is absolutely the right word, because in Oxford, so there is this real depth of expertise around healthcare and gene sciences. As I say, you mentioned Bristol. So Bristol has pretty much a telecoms ecosystem. So Orange was down there. So systems and silicon as well. There's a lot of software companies that have been very valuable that have grown up around that because they had the commercial focus. Their customers were there. so the engineers that they needed, that understood what they needed to develop, were in that local market, and they were able to gain momentum. And as I said, they weren't in effect limited by being in a local cluster. They were able to benefit from it in the early stage, and then obviously as they grew up, then they expanded their horizons and started to expand across the UK and subsequently internationally.
Great, thank you. Now, Mark, I know you also operate in Oxford.
I don't think I need that.
I think
That's what it
these
says.
work now. Yeah. Only Max. Sorry,
Only Max.
there's a sign there saying only Max needed the handheld. Thank you. So Mark, I know you also operate in Oxford, but you have a number of offices across the country. Now, how do you invest across the UK?
So we've got 9 offices across the Midlands, north of England, and Edinburgh in Scotland, and we've got, I think, 85, 86 employees now. And the previous panel, which I thought was really enlightening, I really enjoyed the previous panel, and they talked about deal flows from networks and supports from and absolutely. So we work with 19 universities, all in the regions as well, and we do invest. Basically, if you stand in Oxford and look upwards, we invest from Oxford upwards. That's how I would crudely say it. We've got 19 universities there. The collective research income, actually, of those universities exceeds Oxford, Cambridge, and Imperial. And so I would say those regions are typically unloved. There's very little capital there. And the approach that Mercia has taken is that you need a skill set to find deals, work deals, invest in deals. And then you need a skill set when they start working to scale those businesses. And it's a very different discipline when it comes to scale them. So Mercia's team is split into really sort of venture capitalists who transact. And then we have individuals who've never done venture capital before, but they've built businesses, quite large businesses. And so there's a sort of baton that gets passed over to those individuals. And we sort of go on that stat that 70% of the scale-up businesses out there are in the regions. They're not in London. About 80% of venture capital is deployed in London. So it has to be a good thing, surely, to be based in the regions, looking for those 70% when everybody else is looking for that 30% in London. And that's at the heart of our investment thesis. And we've been very fortunate. Show of hands, who's heard of Blue Prism? Okay, so Blue Prism, small business, Liverpool-based, 3 individuals, startup, has been tremendously good for Mercia, been tremendously good for British Business Bank as well. And there's lots of those out there. And so I guess we are a bit lucky to have found, and I have to say, we were looking back on the investment paper for that business, and it doesn't say in there unicorn or billion dollar business or anything, but it's in a market cap of over £1 billion now. They just happen along. And long may they continue, actually. And they're in the regions. They're absolutely in the regions. And we're doing a lot more co-investment with institutions now in the regions as we look for those businesses. And I guess finally about a third of the businesses we do are university spin-outs, which offers a tremendous opportunity as long as you have the patience to follow that journey. And typically the university spin-outs take that little bit longer to fulfill their sort of ambition, I'd say.
And talking about patience, Ken, I know you're an investor in some of the panelist funds, and I thought it would be helpful if you could share the public policy role of the British Business Bank in the UK venture market.
Yeah, absolutely. So we invest using government money, so you'd expect us to have a public policy role. We like to invest where an investment from us really makes a difference in terms of getting a fund off the ground, getting a fund to work. But we also want to do that in a very commercially minded way. And actually, we have recently taken on an objective to help rebalance the funding for the regions where, Mark's absolutely right, we've got lots of good companies and sort of less money there. I actually think that all these things tie together quite nicely, because what we're seeing is we can fulfill that public policy role, but actually we're looking at making some quite good investments, and we're going in where the market is a little bit cooler than elsewhere.
And I also mentioned the Northern Powerhouse and the Midlands Engine, and what's been the impact of those initiatives?
So those initiatives where we're using European money, the last of the European money, possibly. Yeah. And that gives us the opportunity, because that's grant money, to take a lot more risk there, but it also brings some of the rules that are associated with European money. And one of those is that we're actually the investor almost of last resort there. Yeah. But we're seeing that there are good companies in the regions that perhaps initially lack some of the ambition that's needed, and the fact that we've put money there, and people like Mark's team have to go out and look for those businesses and encourage them to take investment. We're seeing fantastic impact. We've invested about 40 million through the Northern Powerhouse so far. That's attracted another 60 million of investment alongside us. Some of that's in loans as well as equity investment. But we're really proving that there's a market out there that's ripe for investment, really.
And so moving from investment to returns. Now, the title of this session is the UK region's unicorn country ? So we've been talking amongst ourselves about whether or not getting to the $1 billion valuation really is the ultimate goal. And I'd be interested in hearing all your thoughts about what success looks like to you, including the unicorns that you've invested in across the country. Starting with you, Mark.
Yeah. So yeah, as I said, when we have an initial investment paper, it doesn't say this is going to be $1 billion business. Yeah. So that is rarely spoken about. And typically, we're looking at businesses that we think we can get to the 50 to 200 million sort of mark. And we're very pragmatic and realistic on those sort of businesses. We have been very fortunate in the businesses that we've picked to date. So in the Midlands, we backed a business called Alinea, which we sold to Arm on a full cash return. A couple of years ago. It was the first acquisition, actually, after they themselves were bought by SoftBank. That was a good result for us, 26 times our money we made on that. Blue Prism was a North of England business. So far, 900,000 has become, I think, £84 million for us in that business. So that was a very good return for us. Don't you all do that? But they're there, I guess. Yeah. So the returns are happening. We're quite focused on trade sales and cash returns, and I know there's a lot of debate about letting go of these businesses in that route. Blue Prism, of course, was a listed business, and that's not what happened in that respect. So, but majority of our businesses are trade sales, typically sold on, and our sort of revenue growth stories. Very rarely, I mean, it's pure VC. They're revenue growth stories. They've got a promise, a technology, a scalable business model, and a larger corporation picks that up and embeds it typically.
And Max, I know you reported on dragons, rather than unicorns. Do you want to let the audience know what a dragon is?
Dragon is a company that returns the fund, so it's ultimately about the ability to invest a sizable amount of capital and also see significant multiple on that capital. And dragons actually come less often than unicorns, because the world right now is fascinated on the unicorns, and I think we're becoming more ambitious as well. As an investor, we like to see companies that have potential to grow at least in multi-hundred million space. But the reality is that I saw some research from the US which showed that out of the 65 unicorns at that time, less than half actually produced a dragon outcome for any of the investors that backed them. And that is because a lot of these companies raise a lot of capital and they don't actually see the multiples that you are expecting to see. Yes, Spotify 64 times recently in Europe, that's both a dragon and a unicorn, and has made some of the investors very happy. But we have a recent example in our portfolio where a company called Grapeshot that was a few $100 million, and that returned one of our funds 2 times, and there was $100 million back to our LPs again. This you don't have to have absolutely ginormous companies to get there, because some of them are incredibly capital efficient.
And Tom, I know you've got thoughts on the fundraising process itself and how this affects returns and valuations.
Yeah, and I think it definitely helps to have big companies in the portfolio. It's obvious to say that, but if you decompose venture returns, usually in any given fund there'll be 1 or 2 companies that are responsible for the vast majority of the return in that fund. And Max is absolutely right to make the point that a unicorn is an absolute measure. A dragon is a relative measure relative to what you put in and what you took out. And whether you need unicorns or very, very large companies in the portfolio really depends on what stage you're making your initial investments. So if you're running a very, very large fund and you're trying to deploy hundreds of millions of dollars capital into the market, there are very, very few companies that can allow you to make say it's a $500 million fund. In very, very crude terms, in order to have a good performance on that fund, you'll need to return about $1.5 billion of cash over the life of the fund, and you need unicorns enabled in order to be able to do that, because you're typically going to own 10 or 15% of those companies. If you're deploying smaller amounts and you're starting earlier, and you're acquiring your equity stake at a much lower valuation, then obviously, as the guys very, very well pointed out, you can make really good returns in those sort of hundreds of millions of valuation ranges. But it's still challenging to do that. I mean, so our philosophy is that we need to seek those outlier outcomes that we don't think our portfolios work without them. I've not found a fund yet that has found a safe way to do early stage investments and get to the 3x fund return, 3x in the fund outcome that they're seeking. That is very much a growth equity model. It's possible with more mature businesses, but with the loss rate that you have in a venture portfolio, I personally think it's impossible to do that. You need big outcomes in order to succeed at the fund level.
So unicorns are valuable. We've got more of them across the country. We've also got some dragons, and for all you Game of Thrones fans out there. And we are seeing returns going back to our investors, including Ken. So curious, given that you are one of the biggest venture investors in the UK market, curious about your track record at the moment and how some of these success stories are actually translating into actual returns.
Yes. Well, Max's Dragon was very good for us. I think it's sort of in headline terms, if you were a private investor investing alongside our Enterprise Capital Fund program, and if you'd invested in all the funds, good and bad, you'd be looking at about an 18% IRR, which isn't bad today. That's obviously not a financial promotion, and future, etc., etc.
Sorry.
I was chatting, and I won't name the fund manager, he'll be glad about this, but I was chatting with one of our fund managers in the coffee place earlier, promising me a 10x return. And we all know that venture capitalists are shrinking violets and not overly enthusiastic, so I'm actually expecting at least 20 on that one. I think our funds are invested in a third of the UK's unicorns in the past 3 or 4 years. Our pari passu funding, and you've got Catherine coming along later to talk about British Patient Capital. I'm going to throw a number out and watch Ian very carefully here. I think that's 19% IRR at the moment on our pari passu funds. They're obviously a lot younger. So I think, as well as fulfilling our public policy remit, we're actually doing the taxpayer quite well in terms of getting money back.
Which is great news for all of us. Now, we do have some time for questions, so if you've got a burning question, please submit it through Slido, put your hand up. Now, we have actually had one come through already, and it's, other than university networks, what else is the primary or secondary origination in the regions? So where else do you get your deals?
Can I two things. Firstly, shameless plug. Mercia's got a Capital Markets Day on the 18th at Brewery House. If you want to find out more about Mercia, come along to that. And then the second point is that we see serial entrepreneurs now. So we've been doing this long enough for people to have made money and started again. So we have an academic who's not an academic. So, in fact, OCP and Mercia did the Alinea business. And that academic has gone on to do serial businesses. And we have a business called Cioxis, actually, that started off as a University of Birmingham spin-out. And the academic there has done a business called Oxford Genetics, which is going extremely well as well. And another business called Nature Antigen Company. So although the first one was a university spin-out, what they've learnt along that journey has meant that they've been able to carry on doing this on a repeated occasion, not using university intellectual property, but having that sort of passion and realism for what good looks like. We find that our deal flow is through those individuals. I mean, we've got 400 companies across our funds, and the board members of those are a huge and important source of deal flow to us now. So I would say networks and universities are probably exclusively where we're getting our deal flow from, not really from cold approaches, actually. Okay. We do get a lot of those, but those are more difficult, actually, to do.
Just to reiterate on that as well, while the university, or Cambridge University in particular, is incredibly powerful, and some of the other relationships that we have are also very productive, the bulk of the innovation we actually see as happening in the existing technology companies, the arms of this world spinning companies out. And you know, it's just being there. It's being deeply connected into a particular ecosystem where you are either known by the founders of that company, or at least somebody that they really trust. Working very closely with the business angels, especially those who were entrepreneurs themselves. That's an incredibly valuable part for us as well. So yeah, there's no magic bullets there, but deep connection into the ecosystem is the bit that really works.
There have always been big businesses in the region, so we're focusing really here on sort of technology, and biotech startups to an extent that are growing to really large valuations. But there are very significant businesses. As an anecdote, I'm involved in a business up in Manchester called Push Doctor. The key angel in that business, the person that funded the startup phase, is a guy called Noel McKee, and Noel made his first fortune selling car dealerships. Off the back of that, he made his second fortune because he founded a tech business which is called We Buy Any Car. And then exited that business, and that sort of thing happens everywhere. It's not, it's easy to think, being in London, that that all of the wealth creation sort of clusters around here, but it absolutely doesn't. There are great businesses everywhere, and increasingly people are seeing that there are technology opportunities around market spaces that they know, and those people are adding to the local ecosystems as well.
Ken, was there anything you wanted to add to that?
I think if we look at our regional funds. Well, we have the Midlands Engine, Northern Powerhouse. We even now have a fund in Cornwall. There are deals that come from universities, but if we just relied on universities, that would not be enough. And I mentioned before a bit about the ambition. I think having fund managers that go out and really sell the idea of investment, it pays off. And it's not just universities.
Great, thank you. Are there any more questions? We've got 58 seconds. Great, thank you. Thank you all for your time today, and thank you all for being here as well.